welcome everyone to our webinar on how you prove someone exists when there's no data on them. So you may or may not know, if you're on this call, that millions of people across the UK are essentially shut out of mainstream finance because traditional credit and identity checks can't see who they really are. Now, in this session, we are joined by, it would have been 3, but it's 2 at the moment in case Gareth returns. I'm not, well, I'm sort of a semi-expert in this, I guess. We were due to be joined by Gareth Evans, who is a renowned financial inclusion specialist and the co-director of the Financial Inclusion Centre. We are joined by Biz, who is the head of product at Infact, and I will let him introduce himself in just a moment. And we're also joined by Chloe, who is the CEO of Vouchsafe. So, Biz, do you want to say a little bit about yourself and Infact?
Yeah, sure. Hi, I'm Biz Das. I head up the product function at Infact, about 19 odd years in the financial services industry. About Infact, so Infact is the 4th category 1 credit bureau alongside Experian, Equifax and TransUnion, and the first to offer real-time credit referencing in the UK. We work just like other bureaus across the affordability, fraud, credit and ID space.
Thank you. And Chloe, do you want to say a little bit about yourself and Vouchsafe?
Yeah, of course. Hello, everybody. I'm Chloe. I'm CEO and one of the co-founders of Vouchsafe. I used to lead user research in Universal Credit, and now I run Vouchsafe. So Vouchsafe is a verification and anti-fraud platform that allows people to prove who they are with the widest range of evidence. And that sort of goes all the way from using a referee, if you've got no documentation at all the way to using digital ID from all over the world. So it's really flexible and really, really inclusive.
Okay, so what I'm expecting today is that we're going to discuss with some case studies, hopefully, how better identity verification, more flexible and inclusive identity verification, and real-time credit bureau data of the kind that Infact has can help us tackle things like synthetic identities, verify real consumers with far greater accuracy, and essentially support people who are either credit invisible or living in ID poverty. We're going to be here for about 45 minutes. I'm going to save plenty of that time for questions. And I think without further ado, I'm going to start with the first one. So this one's for Biz, and I want to know from what you see and what Infact sees. Talk to me a little bit about the challenge. Talk to me about the key problems that you're seeing in your work and how it is affecting consumers and maybe businesses as well.
Okay, a bit of a loaded question. So basically, we've built a financial system where no or limited data is treated almost the same as high risk. And fraudsters have basically learned how to game that. And basically what's happened is perfectly good people are locked out of credit, while fraudsters seem to be able to gain access to credit. So if you look at a few examples, you've got a 24-year-old renter, for example, who's paid their phone and rent on time every time, but they don't have a credit card. You also have someone who's maybe a key worker who's moved 2 or 3 times in the last 1 or 2 years because they can't afford the rent and therefore they need to make these adjustments. Someone coming out of a relationship, as an example, who basically have moved out and they're trying to open a bank account in their own name. So on paper, if you look at the system, they are all looking consistent with a typical thin file or credit invisible. Traditional credit bureau data and ID checks can't see enough, or they see inconsistencies in the addresses, and typically that leads to a decline. At the same time, if you look at the fraudsters and how fraud is shaping up, that's actually gone the other way, where synthetic IDs, which you talked about, Jay, so that's building slowly over time. Stolen ID or stolen details, they are being stitched together from data breaches, and accounts are being opened, which are open just long enough for it to be considered to be trustworthy, and then we're being hit by a loan stacking problem. So essentially, we've ended up in a very horrible position where real people who are invisible to the system, they are consistently failing the credit checks and ID checks, although they are perfectly normal people and very creditworthy, whereas fake people, they end up looking normal and they end up exploiting the system. So why is that happening? over-reliance on a very narrow set of signals. So we rely so heavily on traditional credit account, static addresses, and documents. Where the data is slightly inconsistent or messy, we basically say that, okay, there's a higher risk of default. And we are just introducing friction in the wrong places. So where the data is slightly weak or not what a typical lender would recognize, they will just hit them hard with document self-ID, self-ID and bank checks, which just leads to the digital friction, which is not required. And this is just not a problem where it affects when you apply for a loan. It affects, there are real needs that are impacted, such as renting a home, having access to phone and utilities, and everyday finance, for example, just opening a basic bank account. Just to quantify the problem, there was a paper released by HM Treasury that talked about 900,000 customers who are unbanked. 300,000 of those are not by choice. But the good news, of course, is that we're starting to see that using alternative data, it can be quite powerful. Again, just to quote a quick number, we found that 16% of customers who have almost no credit footprint, and therefore they will not be identified through traditional methods, they actually have strong signals, so they could be identified.
Okay, and I guess I imagine Chloe, you've got a similar but different take on the same problem, right? Because I know that from a lot of our work with government, we've been exposed to a completely different side of when you dig into it. It turns out to be the same problem, right? Do you want to talk a bit about that?
Yeah, so I think that essentially we are relying on the one thing I think is really pertinent, that but everything that business said is pertinent, but one of the things that really sticks with me is how messy data is and how messy people's lives are. And we've built financial systems that actually don't allow for people to get divorced or move house a lot because they're renters, or to experience homelessness, or have to financially untether themselves from their partner in an emergency. Like all of these situations are things that happen every day, and we've built systems that don't allow for that flexibility, and people are genuine, but what we have created shows them to be untrustworthy. And I really think that that's the whole challenge, really. In terms of our work with so we worked with the Scottish government early days as part of an innovation challenge, and we found that it's, in the eyes of government, very hard to reach an acceptable level of assurance without a reliance on what they would refer to as acceptable third-party authoritative data. Now, often that authoritative data could be something like a letter from HMRC, like a P60. But if you've not got a PAYE job, or you've not done a self-assessment, then, and if you're in a more difficult situation in your life, then you're not going to interact with that third party, and therefore you're not going to have that evidence. And that goes as well for having a thick enough credit file that they would consider a credit file an authoritative source, and not having a thick enough credit file would be a sign of fraud. And actually it's not. It just means that you haven't taken enough credit. So yeah, I think that using alternative data sources, and we do that at Vouchsafe through asking for alternative forms of proving your identity. So lots of people will immediately in their brain go to a passport or a driving license, but actually that's not. There's millions of people, there's 11 million people in the UK that don't have either of those. And I can't remember the exact stat from For All Finance, but there's 23 million people, I want to say, who are financially insecure in the UK. So you end up with a situation where people just don't have what we would consider to be the trustworthy or authoritative evidence. And actually, there's a better way around that.
Okay. So I guess that leads quite nicely to the next question then, because we're both out here, both of our companies are out here solving this problem in quite different ways. So Infact is doing this through aggregating all these extra, I guess you could call it authoritative data, right? Like evidence that is about people but is not necessarily possessed by that person. And Vouchsafe is out there doing the opposite, so collecting more evidence that the person might have in their possession. How do we bring those two things together to solve this problem in a way that doesn't just open the door to more inventive kinds of fraud? So how do we make it so that, despite being more permissive, you might say, in terms of what you accept from people when you're proving who they are, to give them a loan or open an account or whatever it is, how do we make it so that we don't just accept more made-up identities? And I guess I'll pose that to Biz first.
Sure. Very pertinent question again, just following on from some of the points I made. Stolen IDs are kind of stitched together to create that person, and then typically fraudsters go to a lot of hard work to make sure they use clean IDs and whatnot. What they are always not very good at doing, and what is really hard, is to take these synthetic IDs and then join them up in a way so that it is consistent over time. So that is the first one. So alternative data allows for that, to say, okay, if you do not, you may have just opened a bank account, or there is evidence of certain credit, they may have a utilities or phone contract. And that is something which is linked to that particular, or the personal data over the last 3 or 5 years. Now that kind of adds a level of trust, and it's how you combine these pieces of information together to then build on the trust factor. I think that is quite important.
Yeah, I'm just going to come in and say that at Vouchsafe we talk about layers of assurance, layers of trust. So that checking of multiple sources. I think it's what you pick as an alternative source that really makes a difference. So we've seen in our work, individuals apply for multiple different loans at multiple different organizations with sometimes multiple different addresses. And the additional thing that we do that has been really, really interesting is checking someone's, we call it an online footprint analysis. So we use someone's mobile number or their email address to see what other accounts they've signed up to. So if you've got a Netflix or an Amazon or a Facebook or a LinkedIn, we can see that you have those accounts. We're not in the business of giving you your customer's Instagram, because that would be wild. But what we are in the business of is understanding how frequently that email address has been used, what accounts it has been used for, and if the profile picture across all of them is consistent. So it's when you create a synthetic identity, or when a fraudster creates a synthetic identity for one use case, or to apply for a load of accounts in quick succession, they often create a new email address. And it's really, really interesting to see how often that happens. And we will return a low trust score on a brand new email that's not been that's got, you know, suspicious velocity or no other accounts associated to it. And that's, for us, that's one of those alternative data sources that we can use to bolster a verification in order to prove that it's not a synthetic or stolen identity, if you're associating an email address with an identity that you've stolen.
Just to quickly add on that, when we talk about fraud, when we talk about synthetic ID, synthetic fraud, but fraud is just not third party, it can be first party as well. And that is where we need to get smarter with decisioning. So for example, Chloe, you mentioned velocity as an example. So that again is a very good example to see that if you've got multiple applications coming from the same IP address with the same personal data but different income or financial details, you know that someone's trying to either game the system or they are trying to push through a lot of applications. Again, we are fortunate enough to see loan stacking as an example, but just the behavior of that is can be deemed to be suspicious. So it's not about just marking applications as fraud, also there could be underlying financial difficulty reasons why they are trying to get access to as much credit as they possibly can before the traditional bureau files, for example, they update.
Yeah, I always talk about when we talked about this in our pre-call, Biz, I don't know if you've had time to watch it, but I recommended that you go and watch The Tinder Swindler on Netflix. And I think that apart from it being one of my favorite documentaries ever, because I think it's absolutely fascinating, the main indicator that there was something suspicious going on was that one of the survivors of the scam had applied for, I think, something like 15 different high like high amount credit cards and loans in 60 days, and nobody flagged that. And the narrative is that if someone does that, they are a fraudster. But there are so many things that could be going on. You could be being scammed, your data could have been stolen, but also you could be doing it from a point of desperation. And I think that's something that we do really need to remember when we think about tackling first party fraud. We have to think about the motivations of why people are doing it.
Yeah.
If I was just as a continuation to this question, if I was going to say, you know, we talked about the shape of the problem a few minutes ago. If I was going to try and bring this full circle and say, prove to me that this can solve the problem that we've identified, you know, using telco data, using email data, what would you say to that, both of you? What would your like go-to data point or your go-to case study be to prove that this is the solution to that problem that we just spoke about? Should we do Chloe first for this one?
I think it would be, I probably would pull on the one that I mentioned earlier, about the email addresses being newly set up and being associated with a different name or different mobile number to what had been provided in the application. That's a real suspicious sign, I think, when you've got a brand new email address for somebody who is applying for a loan, and then that person shows up again with a different email address. It just confirms what Vouchsafe, the platform, was suspecting all along. So I think for me, it's our online activity as individuals. Even if you've not got a social media account, you're still probably going to have some kind of online footprint. And you know, when I was volunteering at Crisis as a digital inclusion volunteer, people who were experiencing homelessness still had email addresses. And so it's something that so many of us have. To me, it seems obvious that we would pull on that information in order to bolster a verification or essentially check for fraud. It's something that's worked for us in the past, and it's something that's helped us catch suspicious behaviour.
Okay. And Biz, what would your go-to data point or your go-to case study be?
So I'd probably say it's, I mean, there are so many data sources out there. It's really a question of how you end up using it. A very valid point from Chloe in the email address example is not just when it was opened, when was it first seen? There is analysis on, does the first or part of the name appear in the first part of the email address, and does that actually mean something? What we've noticed is mobile intelligence can be quite powerful. Because number one, it is definitely an alternative source, and especially something which can also be exploited. So for example, if it was seen multiple times, it just could be a case where the fraudsters just put a whole load of applications using that mobile number and a set of PII. So after a period, it will start verifying. But for example, we go direct to source and we obtain not just whether the PII is linked to that mobile number, but is it active? Has it been held over a period of time? And also additional intelligence, such as has there been a recent SIM swap? Are all calls forwarded, for example? So all of this as a single data point does not add a lot of value. But when you join them together and then you look at credit behavior, velocity, IP, etc., it starts telling a story. And it's about understanding that story and creating those layers so that if they pass one of the checks, you've got the next layer of check, which has to be relevant, it has to be proportionate, but it needs to exist intentionally.
Okay, that makes sense. So I'm quite easily convinced, but some people who aren't necessarily quite as easily convinced are the regulators that us and all of the people who are here on the call need to appease. So when it comes to the requirements on the industry that we all operate in, accepting these alternative, in quotes, data sources and accepting that they pass muster, accepting that they solve the problem and they are as good as what came before, if not better, where's the holdup? Is it purely that the technology is only recent, or like are the regulations lagging behind here? What's the holdup here, and how do we best make the case to regulators that this is fit for purpose and ready to go today. And I don't know, should we do Chloe first for that one, and then it's fair.
I think there's multiple reasons why. I think the first is that the flexibility of the technology just hasn't been there before. So my mum met my dad she was working on the front desks at NatWest in Kingswood, Bristol. And when someone would come in to open an account, my mum, as a teller in a bank, would be thinking to herself, oh, that's Sally, the hairdresser. I've known her for 15 years. She can come in, she can open an account. I know her. And now we're in a situation where most account opening is done online. There are options for example, if you don't have ID or you don't have a passport and a driving license and you can't get through an original ID verification, that you could go and take a letter from your GP into branch and then have someone sign that, and then at that point they'd open an account for you manually, and then you'd have to try and get online access, and it's just a horrific user journey for people. So there are alternative methods out there, but they are difficult to navigate, and they sort of exist, but within this world where you might only be able to open a really basic bank account. I think what's holding back, aside from the flexibility of technology previously, is probably it probably is a little bit of an education piece and a risk appetite, because we are essentially the financial world. We are essentially speaking to an industry that is quite traditional. So I think it's a case of knowing what we've got works and showing that we are catching suspicious behavior and we are preventing fraud. It's also, I think it's also because life has got harder. So Scottish Financial Enterprise have been talking about a trial.
We were a trade association, I guess, for various financial services firms in Scotland. Lots of the big banks are members.
Yeah, and exactly, thank you. And they've been talking about how a mission that they've got where no child leaves mandatory education in Scotland without making a fully informed decision about whether they want a bank account or not. And if they do, having an opportunity to open that bank account in school. 30 years ago, that was normal. People, you had lessons in school, you opened a bank account, the bank came to school within Scotland. And we've just stopped doing that now. We've stopped enabling people to open accounts from a young age and helping them through that journey, which will then only create more opportunities for you to engage with financial services later on. So compliance teams, flexibility of technology, and the fact that we've stopped putting effort into this.
Okay. Biz, anything to add?
Very difficult to follow up on that answer from Chloe. Yeah, just to kind of resonate the earlier points, which is, I think the whole plumbing is pretty much old school. So we tend to look at data which exists in the financial universe anyway. So anyone who already has credit is more likely to get credit. Otherwise, it is not. But I think even the incentives are pretty weak. And this is just not a commercial incentive in terms of interest yield, for example. The cost of getting something wrong and the fines a regulator can impose far outweigh the fear of excluding someone from a credit. And I think that is a mind shift or mindset shift, and something that the regulator could do more to address and provide assurance. Yes, if there's a really bad customer outcome, 100% it needs to be addressed, but equally the right intention needs to be rewarded. And I think the regulators can do more to achieve that.
Okay.
Yeah.
So we're going to do some audience questions now. So I have one very quick announcement while I wait for people to drop their hands, and I'll throw a question of my own in if people aren't forthcoming. We have a few stored up. But I think it's probably worth saying that we're not doing this webinar now for no reason. The reason we're doing it is because Vouchsafe has just integrated Infact's data into our platform, and we hope that over time that will become a way for people who are like not necessarily the biggest banks, people for whom accessing this kind of data would normally be very, very difficult or very, very expensive. We hope to essentially democratize access to it. And we hope to make it so that people at credit unions, say, or smaller lenders can use the kind of data that Biz is talking about and use that as part of their determination when they onboard members or onboard consumers. And they can use that fully integrated into the Vouchsafe platform. So we're really excited about that. It's currently experimental, but that is going to be launching very, very soon. We'll put it in our newsletter and I'll send you all follow-up instructions if you want to try it out. But that's essentially the reason that we've done this webinar now. So does anyone have a question that they'd like to ask? I think I've gotten through everything that I've got. I can see Gareth's joined us. Hello.
Hi, I'm hoping you can hear me okay, and there's no delay on the line. So I'm really, really sorry about the connection down here. I'm currently doing some focus groups with people who lived experience at the food bank down in Hammersmith, and this issue of ID and lack of access to financial services is a key thing that's come out of some of those discussions. So I'm glad to be down here, but I'm really sorry that that's meant that I've not been able to do my chairing, and Jay's had to step in valiantly to take over. So thank you so much, and thanks for apologies for not being involved fully. I just wanted to sort of pick up. I'm going to take my chair's role back in house and back in hand, and just ask what people think are Chloe and Biz, some of the things that have come out of the financial inclusion strategy that was launched probably 4 or 5 weeks ago now, and is there anything that you think should make things clearer, or any opportunities that you see within that document?
Yeah, I'll take that one first. First of all, it was great to see it finally published, and I think that there are some things that stand out around ID requirements. And for me, I can't remember the exact wording of the line. I should have read it before I hopped on the webinar, but essentially flexibility around what financial institutions accept is vital when it comes to furthering financial inclusion. It's really important. It's a thing that we should be doing. And that's kind of great to see written, because it's something we've been peddling for the just over a year we've been live. And also, I think that there's a real opportunity here for digital ID. So it's a real conscientious issue. People have opinions on it and sway often strongly one way or the other. But if we get this right, if the government get this right, and if we as a sort of verifiers and financial services get this right, it could create a situation where ID poverty is relatively well handled, and where when we're pulling on those additional data sources that we've been talking about, that becomes even more of a strengthener when it comes to verifying the trustworthiness and identity of customers. We do need to think about what digital inclusion and how important digital inclusion is to financial inclusion, not only because digital ID will need to have a physical ID counterpart for people without smartphones, but because of how much of our access to financial services is digital first or digital only. But there is a huge opportunity here, I think, for that flexibility in what you accept as ID, essentially furthering so much access to financial services.
That's great. Thank you, Chloe. Great points. And Biz, have you got any thoughts on the recent financial inclusion strategy and what it might mean?
Yeah, I think the one that really stuck out for me was so Chloe talked about digital inclusion and how digitizing the identity checks leads to certain benefits, but then the inadvertent digital exclusion that also is created. Because in a modern society, we almost expect that everyone has a mobile phone and they know how to use it. And we've got to take a step back and not see these as customers and applicants, but people. You talk about even like the NHS, they've rolled out ways to obtain or send out digitally prescriptions, allow people to submit problems, but also online consultations and whatnot. And it is very evident that just rolling out a digital solution does not automatically lead to digital inclusion. Is the education and the value exchange that needs to be still provided. So that kind of creates I won't say a problem, but it is a good reminder that we can't just assume that by having these happy paths and happy customer journeys, we've actually solved the problem. There is more to be done.
Yeah, no, really good, Biz. Thank you. So I'm not seeing any hands from anybody here. Is there any questions that people have? Oh, there we go. Would you like to come in and ask your question?
Yeah. Hi everyone. Hi Biz. Hi Chloe. Hi Jay and Gareth. Thank you for this. My question is regarding, well, it's posed at Biz. So I'm aware that you are essentially helping the credit invisibles, but I know one reason why a lot of people become credit invisible is that they move from one country to another. So I'm Nigerian and I might have built up a credit file there. And Vouchsafe also helps to take alternative forms of identities. So I'm aware that we might, like with our building out of digital ID, someone with a Nigerian insurance number can prove who they are. How does this work for credit files? Do you also consolidate this credit data from other parts of the world?
Very good question. So I remember moving to the UK about 20 years ago, and a very similar situation where I was very thin file. There's a lot of migration, of course, happening now. And what we cannot do to a greater extent is leverage data from different parts of the world. And there are different reasons for that. Number one, the way credit data is interpreted, there is no standard format globally. And also there are certain regions who just operate on the basis of adverse bureau. They don't look at positive data. And that kind of fundamentally means that the computer says yes or no, that kind of breaks that system. However, where there are thin files, we are actively trying to solve the problem. We are working on a solution, which I don't want to talk about too much on this call, but just for you to know that the way we look at it is certain customers based on information that they are providing, even though they may be new to credit, and that is just not someone who's moved to the UK, there could be young adults as well. There are certain behavioral signals that we can capture that basically show that, okay, where is the inherent risk and are they resilient enough to take on credit? So someone who's moving to the UK as part of, with a job, for example, so they are tier 2 backed and therefore they're guaranteed employment to a certain extent, unless of course they are up to greater mischief. And that means that the credit worthiness of that customer and the ability to take credit is far different to someone who may have existed in the UK for a long time. So we are taking these factors in to have, or try and drive the proportional way of assessing someone's behavioral patterns to say, okay, are you likely to be a good candidate for credit? It does not solve the entire problem, but it goes quite far in making sure that we are able to assess them appropriately.
So this is shifting from like being solely based on the credit information, or it's becoming more holistic to say like the behavior can also indicate whether somebody is credit worthy in a sense. Is that what you're saying?
To a certain extent, because what credit worthiness is strictly assessing is your willingness to pay and the likelihood of a repayment. Without credit information, so what is credit information? Either you've got adverse behavior, such as X number of missed payments in Y months, or you look at credit utilization, such as have you maxed out on your credit card, how you highly utilized, etc. Someone who's new to the UK or new to credit, they will not have that information. And the current framework means that they will always be excluded. Open banking has tried to solve the problem. It has solved it to a smaller extent, but I think we all know that there are great limitations of that. And again, it's going back to not using a single source, but try and understand the customer, make sure that you try and figure out their willingness to pay. And of course, then they need to go through regulatory checks, such as if they say that they're employed, we might not be able to prove that through Cater data, open banking, for example, but there will be payslip. So it just takes some of the hard work away by doing these pre-checks. That makes sense.
Okay, thank you.
Thank you for your question. That was really great. Has that provoked anybody else to come with any other questions that they might have for Biz or Chloe?
I'll ask one.
Perfect. Please go ahead.
I mean, we already heard a little bit about digital ID, but I kind of want to go a little bit further than that. I want to ask, let's say 5 or 10 years, however long we think it will take for the current trends to come to fruition. I'm a consumer. I'm applying for a loan or a credit card or what have you. What is the ideal process that I go through, step by step, shall we say? Like what happens first? What happens then? Like, what does it actually look like for me to get to whatever the outcome that I want is? What's the user journey in an ideal world?
Do you want to take that one, Biz, or shall I?
No, I can take that. I just want to understand the question a bit further, Jay. So, are you asking for an ideal customer, what does a good journey look like? Is that pretty much your question?
Yeah, but not necessarily with today's technology. I think I'm curious about what we ideally want it to be if all of these enabling technologies come along and they do what we want them to. What do we eventually enable rather than like the best possible journey today?
Okay, I think from a data point of view, there could be better centralization of data. So at the moment, data does exist, like I said at the start of the call, where it can be quite granular, which is very useful, but they all exist in isolation. It's a question of bringing it all together, so it starts telling a story as opposed to people or lenders and data scientists looking at data in isolation and trying to extract what that little piece of data says. And that's the only way that you really answer the FCA's challenge points, which is how do you make sure that all of your decisions are proportionate? Because what you cannot do, because it is unrealistic to expect that every customer application will be decisioned manually and the entire financial life history will be consolidated into a view, and then you make a very unique decision for that customer. That's not realistic. However, through centralization, I think you get a better picture to make sure that, okay, what are the trend behaviors that we see that allows for better products, access to products, better products, and pricing?
Yeah, I think to add on that, just what you were saying about the dream user journey, I think in the world that I've created in my head, it looks like people having more control over what they're sharing and when they're sharing it. So I often think about, in terms of digital ID, I often think about if you're buying an age-restricted product in the shop, you're handing your driving license, if you've got one, over, and I'm letting the guy in Tesco know not just that I am old enough to buy this bottle of chicken wine, but that I'm my full name, my address, and legally what vehicles I'm allowed to drive. And that's not like that. Sales assistant in Tesco doesn't need that information about me. So I think there's a world in which people share what they want to share, and they share it or what they need to share at the right time. And on top of that, I think a lot of it all of these alternative or these additional data checks that we are talking about will be something that happens seamlessly in the background. And if somebody does need the decision of no, because of perhaps creditworthiness or affordability, we can get to that decision quicker and refer people on to something that works for them, instead of taking someone through a really arduous journey where they share all of their data and then they get told that they can't, that they're not going to get a loan. We need to have people sharing things at the right time, sharing what they need to share, and delivering decisions that are justified and quickly, and then also moving people to financial services that work for them, even if the one that we're providing or that you're providing doesn't. I think that's what it would look like for me.
Thank you, Chloe. That's a great explanation, and I'm particularly on a similar point about, the ultimate decision, it needs to be informed and everything, but if we're excluding people from even getting to a decision because they don't have a passport or they don't have a driver's license, That was one of the users today was just saying, you know, I mean, my passport's 2 or 3 years out of date. There's no way I can afford £100 to get that. So I literally now cannot prove who I am for whether I need to apply for a bank account, or whether I'm applying to the council for hardship support, whatever it is. If I've got to prove who I am, I can't do it. So I think we've got, if anybody has got a final question, we could probably get one final question to our panel if we have. But otherwise, forever speak now or forever hold your peace, I think is the term.
Speak now or send an email later.
And we'll answer any questions afterwards. So in that case, what I will do is apologize for my poor chairing and poor internet connection because of that. And I'm really sorry to have missed the start of that discussion. But thank you to Jay for stepping into the breach. Thank you to Biz and Chloe for some amazing points around this topic. I think it's increasingly coming to fruition around the importance of this, and it's great to hear how both of the organizations are really tackling this and enabling the use of innovative data access and innovative data points and technology to try to resolve some of these challenges. So hopefully everyone's found it useful. And as Chloe sort of indicated, if there are any other questions or anybody would like any extra information, please do reach out to everybody through the various different communications. So thank you very much for joining us, and hopefully have a good rest of your Monday.